Alright, a quick one. Good morning, everybody, wherever you are watching me from. I want to evaluate a particular concern that some of my students have complained about, and I want you to understand that you should always try to be in charge of your chat whenever you open your system. You know how I approach my trade. Okay, this setup was given yesterday morning, and it has been buying. It's never close to our stop loss, and it has hit the first TP. So how do we go about this? How did I come about this setup? First of all, I checked my daily time frame. Normally, because we are day traders, I check my daily time frame. And what is my daily time frame was saying? What was my daily time frame saying? If I zoom in properly, you will understand that my daily time frame is showing a bullish mitigation block, like as it is here. We have a higher low, higher high, higher low, higher high, higher low, and higher high that broke this resistance. Now the resistance has turned to support, and from here to this place, I see they call it what is it called? I'm sorry. I still call it okay. This is not that. This is a breakup structure, but I still call it an order flow, or a liquidity void. And when there is a liquidity void of this nature, it leaves a lot of imbalances behind, order block, fair value gap, and so on and so forth. All right. So in this case, there are two fair value gaps that is left behind. So you will now get to know which one to choose among the two. And how do you choose the one that you want? You choose the one that you want by, first of all, identifying the one that falls within the areas of interest. If you are expected to buy, it means you have to choose the fair value gap that falls in the discount area. And now about two of them falls within the discount area. 50% to this 100% is a discount area where we should be looking for a buy. So I just want to let you know how this buy started, and this fair value gap and this fair value gap. Okay, now we have two fair value gaps. We have two fair value gaps here. Let me draw it to this point. This is the fair value gap here. And we have the second one. We have the second one here. We have the second one here. So between these two fair value gaps, one is more important than the other. The one that coincides with the old high here is more important. It's more powerful than the ordinary one here. All right, and this is what ICT call institutional order entry drill type 1. ICED. That's on institutional order IOED. So this is what you should take note of. All right. So, and eventually the fair value gap will not hold long. Why? Because there is this bullish mitigation block also that later held. Let me drop this in there. We have a bullish mitigation block here that later held the price. You understand? And after it got into that place with this bearish engulfing candlestick, then the CRT formed. and that was how it's. I don't want to go deep into that one. Just want to show you how the market structure for. So in that yesterday now we have. Let me remove this. Let me remove this to tidy up my chart. Let me remove this to tidy up my chart. So that yesterday, the same thing that happened here, this bullish mitigation that happened here, another one is happening again. Another one is happening again. We have a higher high, higher low. Then we have a higher high, lower low, lower high, lower low, lower high, and then there is this pullback into this other block. There is this pullback into this other block on the high, on the 1 hour on the daily time frame into this other block. If I go down to the lower time frame, like 1 hour, you will see that it will be very obvious. And the scanner is always showing you everything. Even before I draw my other block, the scanner has already identified. The scanner is giving us doing 80% of this work for us. Okay, look at this bullish engulfing. This bullish engulfing shows that there's an other block, and the scanner has already identified the other block. Let me remove my own. There's an other block. If you have a scanner, you will see where you will see where the rectangular shadow is pointing at the other block. So that is where I identify this other block. Now, seeing the price, seeing the market approaching that area, the first candle came, and the first candle came. I started looking for my candle range theory. This is my candle range high. As in assumption, it's not concluded yet until the other candle is completed. So, and the following candle, let me zoom out for you to see. This is the first candle that entered my area of interest. So I mark my candle range low and my candle range high. But at the end of the day, the second candle that's supposed to have given me the manipulation and closed inside the range did not do that. It closed outside the range. So that invalidated the first candlestick. That invalidated. So now I'm shifting to the other candlestick. Now the other candlestick now has manipulated and take and grab the liquidity in the first candlestick where I mark my range and close inside. So one condition has been met. All right. So the next condition now, having identified this at the 4-hour time frame, I'll go down to the 15-minute time frame to see the structure that it will give before I decide what to do. All right. So as I did yesterday, this is where I met this structure. And what is this structure all about? This is a bullet breaker. A bullet breaker in this form. Let me draw it with this thing. A bullet breaker in this form. This is how this bullet breaker form. Now it can come like this, like this, like this. It break this old low, and then break the lower high, and then as it's coming down like this, I have to prepare myself for long, to go long. All right, I have to prepare myself to go long like this. Okay, this is what I was expecting. So but at the end of the day, it first of all broke my bullet breaker candle, yes, and then there was a fair value gap here, FBG here, that I was expecting the price to FBG, that I was expecting the price to react to. It did not react to that place, and then went into this other block. This is where the bullish movement started from. All right, so let us go to the chart again. So look at it here. I was looking out for this, for my buy to start to begin from here. It failed from there, and then I was expecting it to happen at this fair value gap. In the fair value gap, I could not see I could even at this point, if you have bought from here, with this seemingly manipulation, and with this seemingly candlestick, candle range theory that is formed here, at the close of this candle, if you have bought from here and drop your stop loss, maybe very close to this place, you would have been taken out. You understand? Which is normal. It's a normal thing. You understand? It's normal thing. And what it would have taken out of your equity would have been much. And then at the end of the day, you sit and watch how the trade is going to play out. After taking you out, don't run away. Just stay. Your analysis is still on point. So now this is another candle range that it has formed. So I use this one. Though I did not take any trade until I got to this place, because I was waiting to use this other block to take my trade. You understand? And at the close of this candle, I was able to grab my, to drop the signal that everybody should buy. And we have been buying. We bought into this place. Many of us took our profit. I took some part of the profit and left the other. Why did I leave the other? Because from the 4-hour time frame, my candle range, the first candle range that I saw from the 4-hour time frame was here, and this is where my 40 profit was supposed to be found. So I took the first profit here when it got closer, and when it returned into the area again, I have to drop another buy until this point that I closed the trade. All right, I closed the trade at this point. So now that is all for that. There's this other setup that I saw yesterday, late night yesterday. Just that I don't want to stay up late to monitor a trade, and that is why I do not take that trade. But this morning I saw that the trade delivered. So this is it. This is volatility. The one I just did is volatility 150. So this one this time around is volatility 75s. And how did I go about it? This is a 4-hour time frame. All right. Let's say start from a daily time frame. Okay. So on the daily time frame, there was this. The daily time frame, there was this breakups, there was this change of character that has happened here, which I'm expecting the market to react to on the daily time frame, and it has reacted to it. Change of character, a retest, and then a buy up. Understand? So there's this other block that has been here. This other block was identified from the weekly time frame. Let me check. I think I identified this other block from the weekly time frame, which has become a very strong, the other block. Is it the other block? The fair value gap, yes. There's a fair value gap that was identified from the higher time frame, which is this fair value gap. This fair value gap here. There's a fair value gap here. From this candle, this bullish doji, and this smaller candle, the gap between both of them is our fair value gap, and that is what the market has been reacting to all the while. So as I did yesterday, the fair value gap was still expected to hold the price to take it up. So yesterday night when I saw it that there is this liquidity pool, or liquidity, we call it liquidity inducement, that was found in this area. Now I can see that the liquidity pool has taken place. This liquidity has been grabbed. Whether you call it a trend line liquidity, yeah, it's a trend line liquidity because I have used the trend line to take some trade before. So that has been taken care of. Now we are now expecting the price to react from here to go up, which is what it started doing that yesterday. So how did it happen? I started my analysis by staying by using that same candle range theory. All right. So how did I do it? This bearish movement here, this bearish movement now become my first candle range. I use it as my first candle range. This bearish candle as my first candle range, and this is the manipulation. Right? This is the manipulation. The manipulation took place like this, and there was a buy up. All right? There was a buy up which I was not part of it, but I saw this one yesterday, and now let's go to the 15-minute time. Let's go to the 1 hour time frame. And there was a buy up. Meanwhile, you know, I use every arsenal to analyze my trade. This is my trend line. My trend line. The trend has been obviously created. And the trend is a swing between two or more. It's a trend. A verified trend is a line that joins between two or more swing. First swing, second swing, and then at the break of that trend line like this, and then retrace back, we should be expecting a good buy, and that is what happened here. So at the retest of this break of trend line into is my area of interest. Let me zoom out. At the break of it, I now found another candle range. Candle range. What you people should monitor this. This is the best strategy for you guys. So now at the break of this, I have my candle range. All right, on the 1 hour time frame. This is my manipulation. This is the close in it. So now what are we going to do now? We go down to the 15-minute time frame to check for the structure that the market will present to us. We have a lot of structure or chart patterns. So it depends on which one the market presents to you. So you need to know all this so that you will not be confused whenever you come across any. All right. So on the let's say a 15-minute time frame, the 15-minute time frame. All right, on the 15-minute time frame, this is where I made the market yesterday. After it has dropped this second candle, all right, that is that it has dropped this second candle. I wanted to drop the signal, but I was so tired. I can't stay awake to check to monitor the trade. Okay, now it gives us another bullish breaker again. Another bullish breaker. Look at it. The bullish breaker started from here. If you can see my pointer, like this, and like this. So now, as it breaks this lower high, and then after it has broken this lower low, it retrace back. After this has broken this lower low, this liquidity void. After it has broken this lower low, what do we wait for? We wait for it to take out this lower high. After taking out the lower high, then we start looking for which area that we're supposed to wait and take our trade. Now we have our other block, which the candle, the scanner has already identified for you. Please, if you don't have this scanner, try and get it because it helps you. Now we have this one. We have this other. We have fair value gap. We have this fair value gap. Right? We have this fair value gap. We can use it after it has taken out the fair value gap. It came into our other block, and the scanner gave us a bullish piercing. This is supposed to be our confirmation to buy. Understand? I saw this candle yesterday, and after this second candle, that was when I made the market, and I knew that it was going to buy. But I just left it and I went to sleep. So this is how to use this strategy. I don't have another. I will not teach you any other strategy. Though my strategy may look complex. Yeah, it may look complex because all these things are required for you to get a very good setup. Understand? Because all you need to do to know, all you need to do in the market for you to be profitable is for you to have a quality setup. And a quality setup cannot just come from a simple type of analysis. You understand? We are talking of money here, so you have to sit and work and make sure that you don't just leave any money on the table for anybody. Thank you and welcome. Well, if you want to have more of this my analysis and signal, you can subscribe to this channel and then DM me directly if you want to join my signal group or have access to this scanner. It will help you to gain more confidence on your trading journey. You're welcome.